and welcome to Insight Private Wealth's quarterly investment market wrap. My name is Sam Stallone. I'm principal here at Insight Private Wealth, and I'm being joined today by Dr. Steve Garth, member of our investment committee. Steve, what do you see as the big themes for the last quarter?
Yeah, Sam, well, I think first of all, the vaccine rollout is clearly going to dictate economic recovery across the globe, and I think that's going to continue to play into the economic outlook for the quarter. But from a financial perspective, I think the two charts I've got up here really tell us something about the quarter, and we'll look at these in a little bit more detail. But the first one just shows the ASX 200 over the last 10 years, since 2009, which was as we were coming out of the GFC. And really what you can see is, despite COVID interrupting what's essentially been a remarkable bull run, it's one of the great bull runs of all time. So being invested and staying invested has been really crucial. The 10-year bond yields have suddenly gone up unexpectedly, of course, and market would say that's a change in the expectations around inflation.
So what happened then in the last quarter with the various asset classes?
Yeah, so if you look at the chart we've got up now, you'll see on the far left-hand side in the green, they're the returns of cash and bonds. And of course you can see that going down. Now, when bond yields go up, bond prices go down. And so you're seeing a negative return in the quarter for bonds. Don't let that disturb you too much. It's not uncommon that in periods of a quarter you get a negative return in bonds. That's not sort of the long-term expectation. But if we move to the middle of the chart, that's how the equity markets have gone, with Australian equity on the first of the blue charts, and then the global equity, and then the emerging markets. And we see returns there between 4 and 6% for the quarter. So when you think of annualising that, it's been a terrific quarter for equity markets. And on the right-hand side, we're looking at real estate. Now, Australian real estate is a little bit negative for the quarter, but in fact, its 12-month return is quite incredible. And that's not a surprise, Sam, because they were most hit. They were the worst asset class previously.
And what we're also noting there, I suppose, is that most clients will tend to have perhaps a higher exposure towards those growth assets, so the significant positive returns that we've been seeing there are more than offsetting the small negative numbers, or relatively small negative numbers, that we've been seeing on the bond sector. And quickly, what did we see over the last 12 months?
Yeah, just very quickly, again, Australian bonds a little bit negative, global bonds a little bit positive. Speaks to diversification about having both in a portfolio. But again, look at those equities up around between 25 to 40% in the year. Now, of course, it's extraordinary. It is coming off at the end of the global pandemic when the markets were recovering, but that's still a phenomenal 12-month result.
So, Steve, let's have a look at the Australian share market over the longer period of time, because of the volatility certainly that investors have seen in the last 12 months has been fairly extreme. And the chart that you're having a look at now on screen shows the Australian share market, that the original sell-off in the most recent sell-off through COVID, and a very, very sharp fall, and equally a sharp recovery there. And if we sort of go back through that chart to the global financial crisis, going back to 2008, we can see the magnitude of the fall there during the GFC was pretty well in line with the volatility, that sudden drop that we experienced most recently. But the recovery through the global financial crisis took more than sort of 9 or almost 10 years before it got back to the previous level. So the most recent recovery is most unusual, because what we have experienced in the past is more in line with the GFC recovery.
And Sam, it still sort of plays the point about being disciplined is the best approach for any investor.
Yeah, you never quite know whether or not you're going to get a V-shaped rebound like we've seen most recently, or whether it's going to be more of a W type recovery. Steve, you mentioned that the Australian share market's done reasonably well over the last quarter with a positive 4% type return. Can we take a bit of a deep dive into that and have a look at what the contributing sectors do that work.
Yeah, so sectors, by the way, just mean industry groups, if you like. And the pie chart on the right actually has got a breakdown of Australian sectors by their market cap size. And I don't think this will surprise anyone, but in Australia, the two biggest sectors are financials and materials. Materials are really mining companies, BHP and Rio. Combined, that's about 50% of the Australian market. So clearly, the way materials and financials work will have a big influence on the market. And last year, no surprise, in all of 2020, financials were one of the worst performing assets, as were industrials as well. But now, fast forward to the first quarter of 2021, and you'll see financials are the best performing, or one of the best performing sectors in the quarter. So we're seeing this, what they call a rotation. So financials did poorly, now they're doing well. Doesn't tell us anything about the future, but it does tell us a little bit why the Australian market's got that nice positive 4% edge, because the two big financials and materials are both positive as well. And Sam, I just thought I'd quickly put up this chart as well, because everyone talks about information technology, and IT has definitely been the story for the last couple of years. In the chart here, you see in 2020, over all of 2020, information technology returned close to 60%. Now in Australia, that's essentially Afterpay and Xero. But again, you see in the quarter, this sector rotation, the IT sector has not done so well. It's down about 14%. Now the thing is, that doesn't actually move the dial for the Australian stock market, the ASX 200, because information technology is only about 4% of the overall market.
And I suppose, look, that's probably a good lead into talking about the US stock market, because the tech sector there is significantly larger in comparison to the Australian market.
Yeah, that's right, Sam, and there's a very similar chart here, and I've deliberately used different colours to differentiate these different sectors from Australia. So you can see that the largest sector there is information technology. Now that's Apple and Microsoft, and viewers might be aware Apple is sort of the largest company on the S&P 500, the US stock market. So information technology, and then similar is communication services is quite large as well. That's about 11%. Communication services is Facebook, Google, Netflix, again, companies that have done really well. But again, we're seeing a bit of a sector rotation going on here too. If you look at the chart, you'll see information technology has got that extraordinary return in all of 2020, a return of close to 50%. But you look in the quarter and it's a positive return, but still down a lot. And again, if you move along the right of the bar chart, you'll see financials negative last year, but they're positive in the quarter. So we're seeing a bit of a rotation. Although again, that doesn't tell us anything about expectations for the future.
Of value, as you go through and manage your own financial portfolios and financial affairs, just keep in mind that Insight Private Wealth is not owned by the banks, insurance companies, super funds, broking firms, or any other sort of product manufacturer. We operate a very professional financial services business where we simply provide clients with professional and objective advice around their investments and around their retirement planning. So if we can be of service to you, please don't hesitate to reach out to us. We'd be glad to help.